Good evening, everybody. All right, I guess the pleasant surprise today was the fact that the markets opened higher and traded higher. Now, it could have been just as easy to see a lower open and a sell-off today because Friday we had the bearish engulfing signal pretty much near the top of the trend channel in the Dow. And the same scenario over here in the NASDAQ. Whoops. This way. Left-right combo also at the at the top of this channel. So it wouldn't have been too surprising to see it open lower and come back and test the T line and maybe even come down slightly below it and test the channel. But the fact that they took this market right back up again is just that much more, I want to say, credence to the J-hook pattern still in progress. So while we're here, we'll take a look at, I think it was crude oil. You can see what's happened to crude oil. It's back down to 58.26 a barrel. It gotten up on that spike day and big reversal. And I won't bore you again with my assessment of the crude oil market, which is, in 25 words or less, that probably there's not going to be dramatic swings in crude oil anymore because the United States is a major contributor to the crude oil market, which means there won't be the radical swings when things go on over in the Mideast or someplace else. Let's see. We can see what's happening again, or kind of the same scenario over here in gold. Let's make this smaller. You can kind of see where the reversal occurred over here this last this is fair. There's your big bearish engulfing with a booster. Anytime you see them having a booster, that tells you there's a lot more force heading in this direction. I wouldn't be surprised to see, as long as the markets continue higher, gold maybe come all the way back down to the T line. Okay, let's see. Soybeans, not doing too much of anything. Wheat, very slow, waffling uptrend, not anything that I'd want to trade. Went short, or been trading lean hogs on the short side. Let's make this a little bit bigger. Because observe the obvious. Look where which way is your trend going? Obviously down. Look what happens every time they come up to a resistance level like the T line. They start taking it back down. Do I have the colors mixed up here? Let me change. Make that blue. All right. Yep, so look what happened here. As it came back up in the overbought area, did a doji gap down through the T line, failing at the 50. Where can you kind of extrapolate that this move might go to? maybe somewhere down in here. Because if you draw that line, you can pretty much draw a parallel line. So there's your trend channel. So that makes this your next viable target, at least somewhere down in here. So it at least gives you a visual. First of all, we know exactly where they reversed it again, the resistance level, and that may be the target. Yeah, that may be your support level down here. Okay. MBOT. Here's a case where it opened higher and pretty much started immediately selling off. We knew there was kind of a little, I can't do this anymore without it going way out of the way. Or maybe it doesn't here. We had this kind of little wedge formation. Now, you can, if you bought this, you want to see it open higher and trade higher, because they have the first initial breakout. That's essentially what you're seeing or saw over here in iRobot. I don't know why this thing keeps clicking back down. You can see how we had a big up day. The next day it didn't execute. But remember what we were kind of, estimating, evaluating, that if it opened positive and started trading positive, you wanted to buy because you're more than likely going to have a stick sandwich, which is exactly what this was. Big up day, big down day, big up day. Now, what's the rest of our analysis for this? Well, we saw a cradle pattern right off the 50, saw a breakout, a stick sandwich, and the stick sandwich is bullish. Where do you think your upside potential is on this one? Wave 1, wave 3 probably taking you up into about the $62 area. NEW, when it broke out, there's your stick sandwich. Becomes a viable trade on positive trading tomorrow. PetQ. No, this wasn't a stick sandwich. This was more, look what happened right here at the 50. There's your bullish Harami hammer type signal right off the 50. Where do you think your next target is? So you get that added benefit of seeing what's happening at levels that everybody else is watching, like we see over here in iRobot, right smack dab on the 50, was buying, giving you that much more credibility that that's where everybody's buying. New, right. There's still some very good positions. There's your bobble breakout on SYRS. And how did it break out? A doji sandwich. What did it do today? Another doji sandwich. What's that tell us? We're probably in wave 3. Still a lot more upside. Spice. Just your proverbial, how does that get on there? J-hook pattern. Wave 1, and notice exactly, now I want to point this out so it's clear to everybody. Look what happened exactly on the T-line. Now the reason you want to address this is nobody has the T-line on their charts. And look how this, I don't know what, iRobot is the one that we're recommending. New just had another stick sandwich before PetQ. Either one of those. So you got a J-hook pattern in progress. We're still staying with Luckin. because of the tri-pan bottom, whipsaw, J-hook pattern. You want to stay long on this one. There was another one today that looked just like it, and I forgot what it was. COLL. Can you explain the psychology on kicker and double doji? All right, let me get to them. Well, kicker is very simple. Kicker is you're heading in this direction, and something does something to investor psychology that kicks it this way, where they gap up above the previous day's trading. I can't get rid of it. How do you get rid of that thing? Hide, whatever this is. Hopefully that was it. So that the fact that they've kicked it in the opposite direction says there's been a very strong change of investor sentiment. This one, I guess I didn't get rid of that thing. Double doji. I don't see the double doji here. This happened to be two dojis. Was this one bought out or something? It's unusual for it to trade right at the same level. That's not a double doji. That's a sell-off, probably coming back to the 50-day moving average. All right. Well, Gail, how's everybody missing these things? This one, if it opens positive and starts trading positive, you want to be buying it immediately, which is the stick sandwich that we were illustrating over here in iRobot, which was also what we were illustrating here on New. That's still a bullish sign. Okay, going through some more that we've recommended. UCOM still in a slow uptrend. However, danger, Will Robinson. When they go up in doji, have a safety stop on. That means they aren't. Eli Lilly. Okay. What will usually happen? I take it Derm is a small biotech. When they develop a product, what happens is one of the biggies will come in. Bristol Myers, Johnson & Johnson, and they will, now that they don't have to do all the research to get this product up and running, they just do a deal with the company that developed it, either buy out the company or do a joint venture marketing that the company like Derm will continue to produce the product and Eli Lilly will manufacture or market it. Where would you put on Derm? I would still just kind of use the T-line. I probably would right now use that level. Wouldn't want to see it come back down through there. That could be, but you're not exuberantly away from the T-line, and you're still coming off the kicker, and you broke out through this level. And notice how you broke out through this level is a gap up through that resistance level after a kicker signal. So I would just stay long. So even though you've moved a good distance away from the T-line, you just use your normal trailing stop, which is I'd have a safety stop at today's open. I wouldn't want to see it come back down through there. Oh, what was the third? I can't remember, Bert. What was, MBOT, If it starts, if it opens positive and starts trading positive, you're going to have kind of a stick sandwich setup. Okay. Things like MP needed to stay above the T line. ENPH. You stay long as this stays above the T line. AKTF. Stay long as this 45 degree is in progress. So there's going to be quite a few, not quite a few, but your portfolio, if you get into a good position, there's another kicker signal. Opens here, closes here, gaps up and goes the opposite direction, shows a lot of strength. So on these, if I have a portfolio of 10 positions, I might have 5 or 6 of these where the signal's been put in and the trend is in progress. You don't do anything with them, so you don't have to spend time analyzing them. We saw when this broke out through here, we were buying. Now remember, if you see a gap up in the overbought condition, start looking for a sell signal. That almost got us out of the trade. It traded back below this level, but the fact that they opened it positive the next day continued the uptrend. Now, I think I was showing this in the chat room today. Note the history of this stock. This stock was up here in the mid-60s, and then over the last few weeks, it was down here around 4. Now, they have just sold off one of their divisions for $1 billion Canadian. I don't know what that is in American. But there was a gap to fill up here. And the prospect of, apparently this has some sort of heavy or volatile price movement, but if it's gone from 4 to 20 essentially, but it came from 65, there's people that are, the psychology could be, this one is, Rama, I've gone out to February. I bought the February, I forget whether I've bought the, I own some January that's going to expire, and I bought February's. And what you might do is I looked the other night, thought, all right, what if I bought the February 25s? They were only like 50 cents or so, because there would be a good prospect, or at least a low risk, or at least a reasonable risk situation. Well, Shazam. That they could start moving this back up somewhere in this range. That would take that 50 cents. If they did this over the next 4 weeks, 5 weeks, got up in here, your 50 cents now turning into $5, $10, $15. So that's what I mean, I don't do those very often, but if I see something that has the potential of moving real big, and I don't want to have money exposed, maybe I just pay a little bit for a far out option. Way out of the money, yes. Art, they don't see stop loss orders as much anymore because everything's electronic. But here's the rationale. If this stock is trading what is this? At Maxar. This stock traded 2.6 million shares today. And let's say hypothetically you've got 1,500 shares and you put a stop right here. In this day and age, they are not going to come back and hit your 1,500 shares by having to sell through 420,000 shares to get to it. You want to pretty much, if you're trading a stock that may only trade 75,000 shares, maybe you have that worry. But in this day and age, with the volume as big as it is, if they come back and hit you on a stop, that means they were heading in that direction, and you definitely needed to or should have had your stop in that area. Now, on the other side of the coin, let me think of one that I can't think of one right now. But I'll find one. But if you do get stopped out, that doesn't mean you're out of the trade for good. If it turns around and starts heading back up and doing what you thought it should be doing based upon the candlestick charts, buy it back in. All right, so you missed out on 17 cents or 44 cents or $1.10, depending on the stock. Okay, thank you, Jay. 765 million. You can always buy back. There's a reasonable percentage of the time that I get stopped out, and then eventually by the end of the day, it turns around and heads back up. Let's just use this one for an example. If it started trading higher and I put my stop right here and it came back down, what was it kind of telling us? Kind of telling us at the breakout level they were selling. So I'm glad I got stopped out. However, tomorrow, if it opens here and starts trading back up through this level, I can always buy back because now I'm reevaluating what the chart is telling me, and it's telling me they're not stopping at that resistance level. So just because you get stopped out, first thing you should tell yourself is, okay, good, they came back down through this level. Well, if later in time, it could be 10 minutes, it could be 2 hours later, they start coming back up, you can always buy back in. Okay, when the markets are trending, we can use the big stocks. Amazon isn't one of your best traders right now, except when it did break out, notice what it hasn't been able to do so far. Hasn't been able to close back below the T-line. Apple, when it broke out, way back here, what hasn't it been able to do? It hasn't been able to close below the T-line. What was the, oh, that was Tesla today. I thought somebody upgraded this to $400 or something. Tesla, did they move their upgrade to $600? The important factor, though, is even if you're not trading these, at least you use them for your your indicators to say, all right, the market's strong, and these big ones that everybody else is watching are still being bought. That's pretty good evidence that investor sentiment is still bullish. I think Tesla was moved up to $600, right? Did somebody do $400 on Apple? I can't remember. Here's why you want to keep track of your breakouts. Because seeing Beyond Meat, this one's been stronger than bear's breath for the last, gone from 75 to 118, 115. Those are the type you like to catch, especially if you're option trading. Now, NVIDIA has a chart that you can analyze. Look at your trend kicker signal today. Remember, a trend kicker signal is unlike a kicker signal. Oh, NP, if you're buying them, I wouldn't buy Beyond Bread at these prices. But Tesla, if I was going to trade that, it would be done on obviously an option basis. And at this level, I might be more conservative in maybe buying a spread up here. Maybe buying the 530s and selling the 540s, or even the 550s and 560s, where I don't have a whole lot of money exposed. But let's just say hypothetically, you could buy a February 550 and sell a February 560, and it would cost you $1.80 for that spread. Well, if the spread works, and you go above 560, your $1.80 turns into $10. Good rate of return, and you didn't have a whole lot of money exposed. A short squeeze, it could be, but who knows? It doesn't matter whether it's a short squeeze or people buying. It's still moving in the right direction. Yeah, at this point, that's a good observation, Joel, is at that big a price move, build the gap. I'd be more apt, I wouldn't be buying it now. I'd be more apt to wait to see if it's doing a J hook and then give me something to go after at that point. So NVIDIA, I was saying, has a reason to be buying because you've got the trend kicker signal. Notice how it opened here and closed here. Friday, it gapped it up today above the open of Friday and went this direction. That's a good indication there's more upside. Now, other stocks were up big, like Netflix. But what type of chart pattern is that? Nothing. You can't tell what they're doing here. So you're better off analyzing which chart patterns are working and going after them because at least you have something to evaluate. Western Digital, for example. Almost a consolidation, but notice the one thing that they haven't been able to do with Western Digital. Haven't been able to close this below the T line, and recently they haven't even been able to close it below the 3T line. So this all added together is telling us there's still lots of bullish sentiment in this market. And it's not like it's specific. It's everywhere. So what we want to watch is to make sure that the investor sentiment stays the same. Remember, the more people you hear talking about there's got to be a correction soon, so if you've got something that's up big, just watch to see when the profit taking starts because there's going to be another sector. As long as this market keeps moving up steadily, there's going to get bought, then it's time to take profits, and you start moving your money into another sector that's just now getting bought. I haven't even bothered to look for those type of things because we just have too many trades that are moving in the right direction. There's the gap to fill up there, or I think it's even higher than that. Let me take a look real quick. Okay, I guess that is nothing. Oops. Well, that's not out of, that's not overextended. That's kind of broken out through this level. I would just stay long on that one. All right, so somebody said that this one, SWKS, has a nice J-hook pattern, they're announcing earnings here pretty soon. But this is an excellent J-hook pattern. I wouldn't be afraid to be buying this one. And ATHM is a nice breakout right here at the 200. This is a double doji. Whoever was asking earlier. Kind of an indecisive day, another indecisive day doji. Then the next day they open it positive and take it positive. So the psychology is they take it up, there's some profit taking. Not selling, just profit taking. Another day of profit taking, not real aggressive selling, just profit taking. Then the next day when they open a positive, it tells you this uptrend's still in progress. Would you put a stop under the T-line on Amazon? Yeah, or I would use today's low as a stop. If they're still selling it to where they're bringing it down through this level, that means they're still selling it and they don't have any regard anymore for the support of the T-line. What you really want to see is it trade flat or positive. Usually a double doji is more like this. A doji, then a pullback doji, and then they take it back up. When do you wait for a retest of the 200 on ATHM? If you think that is the probability, you just wait to see if you get a sell signal, or let's say it moves up a couple of days, then you have a doji. Then they open it lower. Well, that's when you take your profits because of the doji rule. Then you kind of figure they're starting to bring it back to test the T-line. I'm sorry, test the 200. Okay, so right now, breakouts are producing very good profits. You can see what happened here on LJPC. The little hammer gap up, breakout. Where do you think they're running this one to? Up here at the 200. ATEC, there's a kicker signal. So what do we kind of expect here? Well, if you're buying this one because of the kicker signal, if it breaks out through this level, it means it's got a lot of running room. Now, the reason we would expect it to be breaking out through that level is because of the kicker signal. This being one of your strongest reversal signals. If you have a fry pan bottom, you are coming out of how high do you expect the handle to go? The handle. The handle. No handle. You expect, well, on this one where you can see you have a fry pan bottom breakout, at least look to see what everybody else is watching to see to be your next target. What do you do to keep your safety stop in here? You have a gap up breakout. That's good. That's what we expect. But you put your safety stop just at today's open. It shouldn't come down through that level. Now, what do we expect after a breakout or for a breakout? We expect a bullish signal that takes us up. If we get a bearish engulfing or a bearish harami and it opens lower, what does that tell us about our breakout? It didn't occur. Close it out. Doesn't tell you to get rid of the chart because you might have a cup and handle type setup like you were seeing over here in, oh boy, was it? Yeah, kind of your cup and handle here on Luckin. And there was another one, I can't remember. CDNA. There's your inverted hammer doji gap up. Kind of your double bottom. Where's your first likely target? There's a gap to fill right here. Where's your next likely target? Up here. Why is this a strong signal? You had an inverted hammer, gravestone doji, gap up. That's kind of number one, the inverted hammer opening positive. You've got a 95% probability or greater that you're going to trade positive. And the fact that they gapped it up through the T line, through the 50, through the 34, shows you there's probably a lot of force to the upside on this one. GWPH. There's your fry pan bottom breakout. How did it break out? With a doji sandwich gap up. I think after hours, if I'm not mistaken, it was trading up here. So where do you think your first target is going to be? There's your gap to fill here. There's your second target. ZS. There was your breakout of your fry pan bottom. This is the evidence we're looking for, that if you can identify kind of a fry pan bottom, double bottom, support on the 50, when they go through this level, they're now going to the next target. Right here. Hold on to your individual requests until I tell Jim to do the double line. There was kind of your doji breakout with the expectation now we could be heading up into this trajectory. So the breakouts are things that you want to keep an eye on and learn what to do after that big price move, because what does a big price move tell us, especially when we're looking at it on a candlestick chart? It tells us there's been a drastic change of investor sentiment. There's probably going to be more to follow. SPWR. There's your bobble breakout. Where do you think your next price move is? The 200-day moving average. CYRX. This is kind of your belt hold type setup. Opened it down here, came back, didn't quite get back into the trading range, but today they did. So what's this tell you right here? Told you they took out a heck of a lot of sellers, which means this pattern is kind of your fry pan bottom little breakout, whipsaw, and now the bulls are in control. That usually means there's a lot of upside because of the bullish pressure. C8 or CWH, there's your J-hook pattern. BBIO, there's your bullish engulfing right smack dab off the 50. What makes this a good entry? Obviously a positive open tomorrow, because what's it telling you? I mean, your bullish or your bullish Harami right here on the 50 in the oversold area. Secondly, it's confirming that the T-line is not going to act as resistance anymore. So where's your next likely target? Back up here, and then maybe you're back into wave 3. So if you're buying on, if this opens positive and you're buying, this makes for a perfect entry, because you know exactly where it should not trade if it opens positive and starts trading positive. It shouldn't trade back below the T-line. There's your J-hook pattern. I'm just showing some of these as obvious patterns. It's called the classic pattern. Well. Kind of a fry pan bottom, breakout, J-hook pattern. This tells you something. Big reversal, kind of a scoop type pattern. You can be buying this one. Probably going to be a lot more. Look at your ticker signal over here. What was the follow through? So I'm kind of going through these because there's your little kicker signal breaking through the 200 on CENA. That implies there's going to be more upside. The more you can get these fixated in your mind, there's a kicker signal on rare. I was looking at this one yesterday or over the weekend saying, if this opens positive, I want to start buying some calls. And then I forgot. That's why you should write down. Well, rigid member, I will chastise you for even being in it. Because where was the place that if you were long, you should have been out of this position? Right there. If you were hoping it was heading back up, you should have been out right there. There was nothing on this chart that told you you wanted to be in this. Remember our simple statistic that if you're trading below the T line, the probabilities are much greater that you're going in this direction. Your ideas. Len, I don't know what that is. My ideas just don't pan out. This is your message. You can start buying this one because what did this tell you? Even though it ended here, that somebody came in with great enthusiasm to start buying, then profit taking. What did this tell you? That great enthusiasm with the profit taking is now profit taking over. That great enthusiasm now will start kicking in. And Trox. Why is this a relevant chart? Because look where it closed. Right there. If this opens positive, what do you think you've got going on? Wave 1, wave 2, going into wave 3. Yeah, that's true. I usually do. I've got a day timer where I write down the picks and the ones that I want to look at. Sometimes I just forget to write them down. There's a J-hook pattern on RADA. I checked the volume. Volume was good on this one. This one can be bought. And once again, this is where you want to kind of really get ingrained in your head the relevance of the T-line. When they pulled this back, once again, if nobody has that T-line on their chart, that's telling you that there's kind of a natural support level that the T-line kind of illustrates. And even in a market that's in an uptrend, there's relevant charts to tell you when to go short. The reason we recommended going short on SPR was wave 1, wave 2, sell signal, a break of this level right here. Wave 3 could be the same magnitude as wave 1. So I always kind of keep a couple short positions in the portfolio because on any given day, if things go bad, if you're trying to close out a few long positions, the short positions are still helping you out. That's true. And so on something like this, where we could see the dumpling top, and we're getting ready to short this one on weakness, well, it gapped down 20%. Pretty much told us that we could probably still short this one. But obviously it would have been a little bit more clever if we could have shorted it on this day. So when I look at something like this, it kind of reminds me to go kind of remember this type of setup, that this is the area I want to start thinking about shorting so I can participate in something like that. No, 3 dark crows are would be kind of the opposite. No, a dark crow, I don't see anything on here. A dark crow is let me make this big enough. Dark crow would be seeing this type of selling. Then the next day, they gap it up almost to where they opened it the previous day and then sell it off again. That's your dark crows. Where would you have entered? I wouldn't have today, but right in here, look at your left-right combo, close below the T-line. That's where we should have been entering on a short. Because we could see the big pattern. There's your dumpling top. We could see how it was failing here and still heading down. Kind of, and what do we expect from a dumpling top? That big price move. Maybe not in one day, but that's the opposite of your fry pan bottom. That you're getting ready to buy the fry pan bottom as you see it just about ready to break out to the upside. All right. Darn, I meant to. Oh, I know what I was going to do. All right, so there's one. There's your fry pan bottom, doji breakout. Now, on an aggressive trade, if I see something like this, where your stochastics are coming up, I can make the stochastics a little bigger. You're right at the breakout level. And let's say I was watching this and it closed right here. I might go in and buy some calls just for this type of situation. That once it pops open, the premiums start expanding very rapidly. Since there are so many good, select which one to buy. Yes. Now, that's, Tim, I've been advocating to everybody that there are probably 18, 20 good candlestick trade setups, ranging anywhere from your best friend signal, Jeremiah, that's a different one. Let me finish. And for example, the big breakouts. Maybe you want to become an expert on candlestick signals and breakouts. What were the other ones that were? Or J-hook patterns. What is the signal for GW? No, okay. Hold on, what strikes? Jeremiah, that's up to each individual. If you're aggressive, you buy out of the money. If you're more conservative, you buy at the money. If I was buying this one, which we did put a recommendation on this one today, but if this opens positive, we'd be buying the, I forget which ones they were. Oh, we were buying earlier in the day at the 52s for $2, with the idea that if this goes to where we suspect it could go, up in this range, I think the 50-day moving average is up here somewhere. That's further than I thought. But if this is wave one, 10 points, 10 points from here takes you up into this area. So you've got a couple of different opportunities. Now, a lot of people say, I want to buy the calls because I'll make money on the calls. But that might not be your best trade. If you're buying the 52s for $2 and it goes up here to all the way up into this level, let's say 60. Okay, you've gone to $8. Not bad, 4 to 1. Or if you think it's going all the way up here, maybe what did we do? We bought the 53s and we sold the 57s. So to make 4 times your money on the calls, it has to come all the way up here. I'm going to put this line up here. But buying the 53s and selling the 57s, I think for $1.10, that if they went to 57 or higher, your $1.10 has gone to $4. So there's a couple advantages. One, you've got less money exposed. 2, your break even is much lower. And 3, it only has to go here to make 4 times your money, whereas buying the calls outright, it has to go up here to make that same money. So we're going to be doing another session on spreads to show everybody the math. So that's why I was saying earlier on, which one was it? Maybe Tesla. Tesla. Do you chase after Tesla? Well, maybe you're better off by doing a spread up here. It doesn't have to go as far as still make some good money. Bert, we will probably do a top rank signals and patterns on a Saturday again pretty soon. But the whole point of it is that every time we look at a pattern, Joe, fry pan bottom, you could, there's kind of your classic, your fry pan bottom, J-hook pattern. If I was going to buy this one, right now I'd have a buy stop just above today's open, because if it comes up there, what's it tell me? That my J-hook pattern's working. So back to that, out of the 18-20 good patterns, that's a lot to learn all at one time. So maybe you just concentrate on 4. The best friend, the left-right combo, the kicker signal, and maybe a fry pan bottom breakout, or whatever you see that you can visually recognize, because I've discovered that what I can very easily see as far as a pattern setup, other people, Tony, hold on to your requests until I tell Jim to do the double line. I forgot what I was saying. But if you learn 4 patterns, now you kind of always be familiar with all of them, but let's say you learn 4 extremely well, that you know exactly what to do at specific points. That if you see this type of situation and you bought over here, you close out the position. Or once it starts moving, now you use your T-line trend to tell you what to do. What was the other one that did break out? I can't remember. There was one that broke out nicely. On the other hand, if this was a big green candle that went up through, now you know what to do with that. So And I can pretty much guarantee that if you were trading only 4 patterns and become an expert at each one of those, you're still going to have more trades than you can handle every day. So somebody was asking earlier, how do you narrow down what ones to do? Well, if you know what the strongest ones are, again, the top rank signals and patterns, that anytime I see a breakout, I was trying to find a best friend. Oh, darn. Trying to think off the top of my head. Well, that was a fry pan bottom breakout. Lulu. Yeah, that's not quite what I was looking for. Usually trying to find something that looks like this. So we know the doji gap up, especially coming out of the oversold area, is a very strong chart pattern. Weibo, that's kind of a kicker signal. But then again, there's your best friend gap up. And what did that do? It started your uptrend. Oh, CNDA. Yes. That's why I should put little stars next to the ones that CENA. So that will probably, we might see this one on the recommended list. Now, how do I analyze the best ones? By knowing which ones I recognize easily as being the strongest signals. There was a couple today. Darn, I didn't write them down. But let me narrow this down. If you analyze or learn to analyze 4 or 5 signals or patterns and become very adept at them, you will never run out of, you'll always have too many picks each day, which puts you in a position where you can cultivate to see which ones are the best, number one. And number two, you will constantly be oriented toward every time that you put on a trade, you know what should happen, you know what to do to stay in or get in, you know how long to stay in that position, and you know exactly when to get out. When you start having that much control of your own investment discipline, now you don't have to worry about all the other rhetoric that you hear out in the markets. Okay, that's about all I've got. Are there any on candlesticks? Did you buy a spread on Maxar or a call because you anticipate? Maxar, I bought. I looked at my positioning tonight. It wasn't what I thought it was. So I might have some spreads on Maxar, but I'm pretty sure. Oops, not even looking at Maxar, are we? I've got spreads for the short-term trading, which I anticipate they could come up here and fill the gap in this area. But then I'm also going to buy some February, which is 4 or 5 weeks away, maybe 25s and pay 50 cents for them, with the idea that if this does get moving, that it's still, dang, I hate when I do that. That now this becomes something that if it breaks through, fills the gap, and starts running, that anything up here is going to take that 50 cents up to $5, $10, $15. And if it doesn't make it, I'm probably going to be making enough on the short-term ones to pay for that 50 cents if things turn around. Okay. I guess, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. All right, let's get these back up to where they're, see what's going on. Bristol Myers, just stay long, a little scoop type pattern. I would suspect coming up to the top of that channel. Snap, just stay long, have your safety stop at today's open. It shouldn't come back down through there. This Monroe or Marathon. Boy, if you're short, you stay short. Other than that, I wouldn't be long or short on this one. QCOM we did. QCOM is uptrend, but again, notice the tails to the upside. That's saying a little bit of danger. You stay long, but I might have a stop just below yesterday's low. Let's make this big enough where we can see it. I might have my stop right here, which might coincide with the T-line tomorrow. GTT, if I was long with the anticipation of a breakout, if this opens lower tomorrow, I close it out. Still look for a cup and handle situation. And Monster, stay long. You can see where this broke out. Stay long on this one. You definitely want to see this one open positive. So you've got this kind of prospect, the next wave. This is where whenever you see them stretch up here, go to your 10-minute chart. I mean, this is just logic. It says if they hit that level again and start selling off, take some profits. Came up, hit that level again, take some profits. What's the obvious? The obvious is they're having a hard time getting through the 200. Worst case scenario is you take your profits at a high probability area, take profits. If they come up through the 200, you can always buy back knowing that it's moving in the right direction. Coop, stay long. RVNC, another one that did a kicker breakout. You stay long on this one. Your safety stop should be at today's open. Might put a safety stop right here because logic says if it comes back down through this level, you're back into the trading range. HIMX needed to open positive and trade positive. Stay long. Put your safety stop at today's open. It shouldn't come back through that level. Colony. You can see it's having a hard time getting through the 50, so this makes it very easy. If it comes back down through the T-line, you close it out. It needs to get up through the 50. I don't think that's going to come up here. QRTEA. Oh, it did. You can stay long. Just watch to see what it does at the 50, which apparently is a resistance level. SDC. If you had closed it out on Friday, which I would have done, you could buy it back on positive trading because it's telling you the 50-day moving average is acting as a support level. ACB, nothing. Crone, you can get ready to buy. You still need to get out of this range, so if you're buying, it logically needs to get through this level pretty quick. And CGC, another one you can be buying. Kind of a fry pan bottom, there's your dimple. Get ready to buy this on positive trading. DHO, you can buy this, again, bouncing up off the 50, J-hook pattern. Stay long, use the T-line as your stop. This Briggs & Stratton, no, BG Foods, nothing. I wouldn't be long or short. If you are short, get ready to cover if it opens positive. I wouldn't be buying it until it breaks up through the T-line. ITT, another one with you getting close to the oversold area. They're coming back up. I wouldn't be short, but I wouldn't be long on this one. It definitely needs to see some strength getting up through the T-line to go back into it. Kind of your J-hook pattern on Echo, you can buy this one on positive trading. SMCR, another one that you got to watch to see what it does here at the 200. You're in the overbought area. It's got to open positive and trade positive to want to stay in it. BMRN. There was a perfect example that if you were long, your safety stop would have been right here. Because if it came back down through there, where do you think it was heading to? Back to the T-line. Right now, I would not be long or short. If you have stayed long, you just now have to watch to make sure it stays up above the T-line. It's not a good looking chart at this point. Uber, you can stay long, but your safety stop should be right here because you've got a hanging man, doji shooting star, hanging man. If they start coming back in this direction, they're starting to sell it off. And now, stay long, put your safety stop. Got to have a trend kicker, but put your safety stop at today's low. Let's see. We did Tesla. Bank of America. Just not a good trader. I wouldn't be long or short. There's no direction on this. I'd be someplace else. CSIQ is in an uptrend. You stay long on this as long as it stays above the T-line. Tesla, all you can do on this one is stay with it. I would have a safety stop if I was long at today's open. We did ATEC, kicker signal. You can get ready to buy on positive trading. ZSOD, another trend kicker signal. You stay long, watch to see what it does at that level. And NKTR, notice where it came back to. Right back to the 200 to see if it was going to act as support. You can be buying this one on positive trading. Or if you really want to be safe, you can buy it if it comes back up through today's open. Rare also had a very good chart. Let's see, was that the one I was looking for? There's your kicker signal breakout. I know out of a big fry pan bottom. Let's make this smaller. Yep, I would suspect your next target is up here. Stay long. Use today's open as your stop, just in case. LJPC broke out nicely with this little best friend, slow curve type setup. I would suspect they're going to the 200. Another one that has broken out. You can stay long on this one also. Whoops, I thought that was PFN. It's 10. Little Morningstar signal. You can buy this one on positive trading. Just watch to see what it does. At the 50. That kind of reminds me, we used to have a pig named Inky because he kept getting out of the pen. Intel, nothing great here. It's just not a good trader. It's too much of an institutional type trader. And knee, you can stay long on this one. The long-term hold, you have to stay long. If you're a long-term hold, I'd hold on to it as long as it stays above the 50. QCOM we did. It's in an uptrend, but it's dojis, so make sure you have a safety stop because they're not convincingly buying, which means anything that could cause selling will do it very rapidly. Labu was back off right to the 50. So you have to watch to see if they can hold up above the 50, which meant Lab D Lab D is starting to move up. Big lots. Stay long. Nice little J-hook pattern. Look at your left-right combo right off the 200. I'd be a buyer on strength on this one. RTRX. You can stay long. I wouldn't necessarily be a buyer of this one. I would just stay long. iRobot, because of the kind of the J-hook classic pattern, the bounce off of here, if this is your target, which if wave 1, wave 3 takes you up here to about 60, you can be buying the calls on positive trading. You definitely want to see it break out through there. But you have a J-hook pattern setting up with the added evidence that it supported at the 50. There's a gap to fill right here, which gets you in the right direction. So you can either be buying the calls, the 52s I think were $2, or you could buy the 53 and sell the 57 for $1.10. But only have to go up to 57 to make 4 times your money, whereas it would have to go up to around 61 or 62 to make the same money on your straight out calls. QCOM tweezer top, not quite. Tweezer top is more exact than that. But the fact that you're seeing selling, so basically you need to see positive open and continued trading. If it starts selling off, it might be telling you this level right here is acting as a resistance level. And I think we did SDC. You can be buying this one on positive trading from here. We did Amazon. Amazon's not your best one out of the biggies. There's other ones that have much better charts. NVIDIA, for example, has got the trend kicker. And ALGN, just stay long on this one. Roku was having a hard time getting out of its own way. I wouldn't be long or short Roku. There's nothing there. And ARWR, you could be shorting it. Now you're in the oversold area. You did a hammer signal. If it opens and trades lower, you can be shorting it. There's this gap they might be coming back to fill. But then if it opened lower and started trading lower, I definitely have my stop at where it opened. CYCN, nice big fry pan bottom. You're right there. That one you can be buying. Sue, yes, we will do a how to pick pick the options. That might have to be an all-day Saturday session. WTR, how come that didn't come up? That's because I goofed up. That's a nice little breakout. How do I get all the stuff on here? That one I would be a buyer. J-hook pattern. And AKRX, this one you can be a buyer also. Look at all the dojis. Now they've told you which way they're going to go. That'd be my first target. Aqua. Let me make it bigger. You can be buying this one on the breakout. Where's your first target? Let's see, 2 points. No. Yeah, your percentage return may not be fantastic on that one. Okay, I would still be definitely looking at iRobot. And MaxR, as long as this Steady Eddie is still in progress, and they've got good things happening, such as that $7.5 million, $750 million infusion of cash, it might be someday back up to the 60 area. Jamel, if you're short, stay short. Whoops, I'm sorry. If you were short, you should have covered your short. I wouldn't necessarily be going long. It's not a real great bullish chart. Unless you just want to play the sideways channel. This one you get ready to buy if it opens positive, kind of your bobble breakout. Once again, coming up to fill this gap in this area. Oh, SP, yes. So on February 4th, which one was it? Oh, I don't know whether I've got. February 4th, what is today? Today is January 13th. So that's 3 weeks away. Probably won't even come into effect. So on February 4th, we'll see what it's doing going into the close that day. Okay, I think the futures are up slightly, but we're in a nice steady uptrend that fights all the rhetoric out there, which is the definition of a true bull market. Is everything consistently moving moving positive no matter what the news is. All right, so with that, everybody have a good evening. We will see you bright and early tomorrow morning. We'll see you then.